Hey, what's going on, guys? So, something really strange happened today, and it has to do with bond prices and what they usually do, but today they did something different, which is kind of odd. So, right here, we can see the 10-year, and I want to explain what this means. Why did it go up, even though stock prices stayed flat or basically went down? Because this really isn't what usually happens or is supposed to happen. And what does this all mean for Bitcoin, for crypto, and also for the global economy? So I want to cover that in this video. So usually when there's a flight to safety, which we are seeing now due to all the uncertainty going on in the economy, in the global economy, you see people buying bonds. But when people buy bonds, yields usually fall. But today, as you can see right here, taking a look at the 1-day chart, the yield went up a ton for the 10-year, which doesn't really make sense or isn't really common. So how it works is bond prices and yields move in opposite directions. If people are buying bonds, it means the yield should be going down. But today we saw the yield massively go up from 3.9 all the way to over 4.2%. So what we're seeing is that people were selling bonds, which again, historically, people buy bonds when there's fear and uncertainty in the marketplace. So why would people be selling bonds when stocks are also going down, when there is this massive uncertainty in the market? That is something that a lot of people were like, this is very, very unusual. And I want to share with you what I think is going on here. So what I think is happening is there is a massive move into US dollars. People are selling stocks and treasuries into US dollars. We can see here that over the last 2 days, the dollar index has gone up, the DXY, and that would show that the dollar is getting more popular and people are wanting to hold dollars. And this could also be a global phenomenon where investors from all over the world are pulling their money out of the US economy, right? Wealthy investors, billionaires, businessmen are taking their money out of the US economy. So they're selling US stocks and they are selling treasuries and they are just completely exiting the US economy because right now a lot of people feel it's very unknown and it's very scary what's going on, and they don't have confidence in the trajectory that Trump is leading the country down. So just more on other countries taking their money out of the US economy. So this is the S&P 500. Essentially, other countries and other trade partners may just be selling off US treasuries, right? They may be selling off US treasuries, and this could be part of a broader de-dollarization. Selling pressure from other sovereign countries could easily spike these yields. So taking a look right here, this massive yield spike, this is another reason, again, that I think this could be happening. But what's also weird is that the dollar right here has rallied over the last 2 days. This is the DXY. So the dollar has been rallying, and usually that's not how it works, because if people are selling treasuries like they are, the dollar usually weakens. But in this case, I guess people want cash, right? People in the US want cash, and possibly people who don't live in the US are, again, getting out of the US economy, and they want cash as well. And really, that's a signal of global stress, which is pretty obvious that we are in. This is a very stressful time globally. Globally, everyone is feeling this right now. So what does this mean for crypto? Let's take a look at Bitcoin. What does this mean for crypto and specifically Bitcoin? So when bonds and stocks fall together and the dollar rises, which we saw, it usually means that people are risk off, right? People are risk off, and short term, that could be negative for Bitcoin and for crypto, because if people are risk off, they could even see Bitcoin as a risky investment, which I don't think it is. I think eventually they'll wake up to that fact. But for now, it's still a very liquid investment that anybody 24/7 can sell, and there's a huge market for it, right? But longer term, I think this could be very, very bullish for Bitcoin, because if other countries are dumping US assets, that's a massive narrative for Bitcoin as a neutral, non-sovereign store value, which is what a lot of Bitcoiners believe, a neutral, non-sovereign store of value. So short term, yeah, not a lot of fun because everything is going down, right? Essentially, everything's going down. Even gold has gone down the last 3 days, which is interesting. So gold hit a new all-time high a couple days ago, $3,100 or so, or $3,166. and now it's at $2,900, $2,980. So everything, even the store of value, the safe haven asset, gold, which has been around for whatever, 3, 4, 5,000 plus years, even that is selling off. But I think long term, again, this is very, very good for Bitcoin. All of this is good for Bitcoin because global unrest, people not trusting traditional financial markets, that leads people to even learn about Bitcoin. Even learn about Bitcoin being like, oh, wow, what are the properties of Bitcoin that makes it, the safest asset in the world, the best way to store wealth ever. So that is, in my opinion, a very good thing for Bitcoin long term. Short term, it sucks though, just because everything is selling off. So what am I looking at? Well, I'm looking at all these things. I'm looking at the stock market selling off, the 10-year going up, the dollar going up, and essentially when things do not happen normally, right? This is the volatility index, massive, massive spike. When financial markets don't perform as they usually do, that is usually a good thing for Bitcoin. Bitcoin and crypto become a lot more attractive because they operate outside, generally, of these established financial markets. Now, obviously, there are ETFs, and Bitcoin is essentially traded globally in all sorts of markets, but it still operates in a different framework that I think a lot of people will be looking at a lot more seriously now. So I'll finish the video with this just to give you guys a little bit of calm at the end of the video. So the S&P 500, the biggest 3-day percent declines. So we are right now the 11th largest 3-day decline, I believe, ever, or since 1950. So not the Great Depression, right? 10.7% over the last 3 days. The times where it was lower would be a couple times in 2020 during the COVID crash, 2008, and then 1987, right? Some pretty big years. And then also we have a 1998 as well. But every single time that we had this large of a 3-day decline in the S&P, take a look what happened. Forward S&P 500 total returns. 1 year, everything is green. Nothing is less than 20% looking 1 year forward. 3-year, the lowest is 23%, okay? And then 5-year, the lowest is 13%, but then we were moving right into the dot-com crash after 98. So taking out this 1998 decline, everything is over 100% returns in the S&P, taking a look at 5 years down the road. So I just want to end the video with that, guys. I know this is massively crazy times, a lot of chaos, tons of global uncertainty, but if you have a long enough time frame, I believe it'll all be okay. Like Charlie shares here in this chart, and like I shared in my last video as well. So I hope you guys are doing well. Leave a comment below. Let me know how you're doing. Till next time, talk with you soon, and bye for now.